Good morning, traders. It's Monday, February the 1st. Taking a look at the charts, we've got the ES mini here, futures contract. This is the SP 500 index. And you can see last week we had a extremely strong rally, short covering rally into the close, or pretty much the entire session. And once the market held up past the lunch hour, people started unwinding their shorts, wanting to go for the weekend. And of course, that continued to hold the market up. And then right in the last half an hour, we saw the market break above a short-term resistance zone and really pop and have a strong move to the upside. Now overall we have come right into resistance, right into these key pivot lows here and these candle highs. We also have all kinds of short-term readings with the short-term cycles high, momentum cycles is topping out. We've got panic buying yesterday. Everyone was covering their shorts and buying and getting long. And we saw that ratio about 16 to 1. Usually a ratio of 3 to 1 is panic buying, and so we saw 16 shares being bought to every one share being sold. And that's usually when you put all that together with the short-term resistance line and short-term cycles topping out, it's usually kind of an area we're going to see the market pause and pull back. You can see the market's pulled back about 0.75% today. Probably going to continue to see this real strong volatility where we see big price swings in the market, up 2%, down 2%, up 2%, down 2%. It's been back and forth, very similar to what we saw back over here. Just huge price action and swings going in the market. Now overall, just kind of take a look where we're at. We've had a big pop. We've had a pretty significant pivot low here in the market, very similar to what we've seen over here, and again also over here. And you can see we're starting to have a little bit of a pause and pullback. Everything was completely extreme on Friday to the up bullish side. Usually you see a little bit of a pullback or pause. The question is, are we going to see like a sideways day like this and more or less a stronger drop, a 50% retracement of that potential rally, or are we just going to get a little sidestep day like this where the market takes a quick breather and then takes a run and breaks out of resistance and then continues to move higher? So that's kind of the big question. You can see it did that back here in October also. Let me just zoom back over here and zoom in a little bit. You can see the same thing. We got to a real significant pivot low, very similar to what we just experienced. You see you got a big sharp recovery, kind of came up into resistance here, into the lower end of resistance. And we just had a 1 day pause. And then of course the market took off and it would rally, rally, pause, rally, pause, rally, rally, pause. And it did that for quite some time. So that's kind of where we're at. The big question is, and this is where I'm at in the grand scheme of things, is I think we're in more or less a major topping phase in the stock market. So this is more or less a significant topping phase. And back in during these pullbacks were very sharp, but they also recovered very quickly. Now we've seen internals, everything has eroded even more. So now we had a big drop and things didn't quite recover the way they're not a V-shaped recovery and it's not a bull market trying to kick you out and then it takes off without you. We kind of struggled here, had another wave of big selling and then it did come back and recover, but of course it made a lower high. We've seen internals continue to erode and now we've had another big drop coming down to this level, breaking this previous low and this other low from back in October 2014. And it's been chopping and grinding here. It hasn't been a V-shaped recovery and a real strong move. And in fact, we've actually seen the panic selling volume indicator that I follow. It's been spiking over 3. It's been more or less 5 and 9 repeatedly, pretty much every other day. And that's a sign that there's big money selling. There's a lot of volume selling. And the general public, I think, is accumulating shares, buying this dip for a big bounce. And I think it's going to be short-lived, and it may be already over. We've still got the momentum or the intermediate cycle pointing to more or less a high around February 27th, 28th, somewhere in there. So we might see this market really chop around. It could be really flat and choppy here until that date, until that turning date. And then I think we could see it really start to break down. This could be a big bear flag that is forming and not much more upside. It'd be very tough to make money to the upside going forward. So we have our position in place. We're going to tighten our stop. And we'll see how things unfold over the next couple of weeks. And eventually, we want to get short probably several different areas of the market for the next big move down and to the break of this head and shoulders neckline in the market. Now let's just jump over to precious metals real quick. Here is the chart of gold. It's moving up again today. You can see we had this rounding formation. We had a pop, pull back, bull flag, another bull flag. We're consolidating. Obviously, if we have strong selling in the market, we're going to see the fearful money move into the safe havens like bonds and precious metals. So we're probably going to see metals continue to move up. But let me just let me clear, remove all the drawing styles. Okay, here we go. Let's just zoom way back here. Just keep in mind gold is making lower highs and lower lows. We've broken down to a multi-year low. We've rallied back up right to the middle range where there's key resistance. We are just trading right across here where we've got pretty significant resistance. It can still go through it and pop above it. We still have to break this high for anything real significant to come into play here. But overall, gold is sold off and it's just kind of recovering and starting to have a little bit of a squeeze up to resistance. Just like we've seen over and over again, the overall trend is down. So we are starting to see some life in some miners. Miners, the overall basket, like the GDX, they are stuck carrying all kinds of junky stocks that are kind of holding it down. But there are some stocks that have been had huge moves in the last week. Some stocks up, 20, 30, 50% in a week. Of course, miners are trading right through resistance here. They broke down and they've popped back up. I do feel as though the precious metal sector is getting very close, and I think the U.S. equities market is very close to a top, and they're going to switch directions. We'll see precious metals become more of a bull market, and we'll see equities become a bear market. So the switch is coming, it just isn't there yet, and there could be, I'm worried there's still a lot more damage in miners. They could really get a big flush out here to the downside still. Taking a look at energies real quick, natural gas down 5.25% this morning. So we had this big pop, kind of a bearish pop and drop. And now we've got a bear flag forming. It looks like we had a short squeeze here on Friday where it was forming a bear flag. And then we saw it looks like shorts got out of their play. They were anticipating the market to break down that week and they didn't want to hold it. So everybody started to cover, created a short squeeze right up into resistance, right through the middle of this noise and right through this previous level over here. And of course, today we're seeing big selling in natural gas down 5.25% and continuing to fall. And that might have been the flush out. Everybody finally got out of their shorts and then the market drops without them, which is how the market tends to move. Looking at crude oil down almost 4% this morning, had a huge rally. It came from our measured move here. It came right down within a few pennies, hit our target of 26.50, and then we saw about a 13 or more percent rally, or maybe it was even more, 15% rally in crude oil. And it came right up into this almost 618 retracement level, into this pivot low here I talked about. This pivot low is going to be significant. We had a little pivot high. It came up, pushed into that level, sold back down, pushed up, sold back down, and today we're seeing it start to roll over. Overall, I think we are going to see this chop around. It could easily come down, test near these lows or make new lows. I think crude oil is going to struggle here for a while. I know I have all kinds of friends who are really not into the stock market, but they're all talking about they want to buy uh, oil stocks. And when everybody starts talking about something, it's probably not going to happen. So uh, what I see kind of unfolding is crude oil. That may have been the bottom, who knows? But I think it's going to flounder down here for a long time. And what's going to happen is the oil companies are going to have terrible earnings quarter after quarter because crude oil will be so low. And the share prices of energy stocks are just going to keep falling. And really, they're nowhere near where they were in 2008, 2009. They are still looking like they're lofty up at the all-time highs. So I think we could see a huge haircut in energy stocks, and I think crude oil is going to flounder down here and until a lot of companies go under, close up, until that whole sector is completely beat down. So yeah, oil may be near a bottom. I don't think it's going to go a whole lot lower than 26.50. Uh, but I think energy stocks are going to keep falling because they're going to have terrible earnings with oil down at this price. And the longer it stays here, the weaker those stocks are going to be, and they're going to continue to crumble. Really, that's about it for this morning. Let me just pull up the chart of this is our percent of stocks above the 20-day moving average. Now, anything above the 75 range is usually the market, or sorry, not 75, the 70 level is usually market overbought. We're looking for a multi-week pullback. Anything below the 30 range, we're starting to look for a significant market bottom and for a multi-week rally. And what we've had here is you can see we've seen declining highs. The market isn't rallying as strong. So right now we're at about 50% of stocks in the equities market trading above their 20-day moving average. So that means 50% of them just rallied up and they're trading at their 20-day moving average, which is resistance. We've got lower highs. We've lost our upward momentum in the market. And this was a huge move. I think we could easily see this kind of chop around for maybe a couple of days, and then we could start to see it head back down and see the bear market kind of really take place. So overall, I think most of the upside move in equities is kind of done based on this indicator. We're back up near a recent high, a declining high. And again, let me just go back to the SPY here real quick. This is the SP 500. I talked about how uh, there is potential. I think everybody seems to be talking about a huge kind of recovery here, and that's what I was hoping for. But the fact it didn't happen during this week, instead it just stalled out, and there was huge waves of selling, and it seemed like everybody was buying into institutional selling, which is not a good sign. We got a big short squeeze here. I think that everybody's anticipating higher prices, a big bounce. I think it's going to stall out. I think we're going to see it weaken, and then I think we're going to see it go crack to the downside. And that is kind of what I think this little indicator is telling us is, let me pull it up here, is we've seen most of the move happen already. It is now at a level here because we've got declining highs. That move is pretty much done, and we're probably going to start to see things soften. So we'll be tightening our stop on our SPY ETF play and maybe even closing it out depending on the price action. We might just tighten it right up that if it pulls back too much today, we just get taken out and we lock in our profits and start looking for a potential over the next couple days or weeks. We're going to look for an entry to get short for a major long-term move to the downside in equities. Anyways, that's it for this morning. Take care. Bye-bye.